The biggest thing I've done that's different is practically every business model I thought of that I have done, I realized that there is an opportunity to scale it by creating a bigger pie for others to join me. First, I started teaching, and then people said they want to do business with me. So I started creating joint venture programs where they can do things with my money, with my knowledge, etc. They can go maybe find the deals, create joint ventures, etc. And then the best thing, then people said, I want to invest with you, Cherif.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil. Today, I'm joined by someone I'm looking forward to chatting with, Cherif Medawar, who is a real estate investor, funds manager, and educator with 35 plus years of experience. So excited to have you on the show today, Cherif.
Thank you. Thanks for having me.
Of course. I think our listeners are really going to take something away from how you're approaching raising capital through your funds and scaling your commercial business. So let's dive in.
Thank you. Well, you want me to get started?
Yeah. How about just first off sharing what your main focus is?
Well, I've been a real estate investor for all my life practically, but I focused mostly on commercial real estate. I've done a lot of residential, but commercial real estate. Then I started educating people on how to invest themselves. So I did a lot of educational events throughout the country for many years. And I still do that. We have over 13,000, 14,000 maybe members, subscriber on YouTube. That's my focus. I do a lot of free trainings and stuff. And we have some joint ventures trainings that people want to, let's say, get started into commercial. They just get a training, go find properties, assign them to my real estate fund. And then I realized the people I trained wanted to grow more. So we helped them set up real estate funds that are very unique and very powerful. So it's been amazing. We have over 1,000 video success stories on YouTube. I don't think there's anybody else has more success stories.
Amazing.
Thank you.
Yeah. How did you get started in the commercial space? Why did you choose that avenue?
Well, when I was very young, I wanted to be in the hotel business. I wanted to be general manager, and I was working at a hotel called Century Plaza Hotel. I was in my early 20s, and a billionaire in the name of Edmond Bessari was a hotel guest several times in the hotel, and he noticed how hard I was working in the hotel business. So he asked me to work for him. He said, come and work for me. I have a hotel, it's a resort, and from there, I'm going to teach you real estate. And this way you can go speak on my behalf and do things, because I want to stay in Europe and travel. So you can do the work on my behalf. I'll tell you what to do and what to say. So that's how I got started. And that was the commercial arena. He was doing bigger deals, incredible developments and stuff. So I got exposed to all that. Then I branched out on my own, and I realized that income producing commercial properties are just so much better, because one deal can change your life. That's how I got going with it.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, that's awesome.
Thank you.
Are you operating throughout the entire US or in a specific market?
Yes, I've done throughout the US, and mainly my assets. I hold a lot of assets in Old San Juan, Puerto Rico, which is the US territory, right, where the cruise ships arrive. And my website, CREPR.com, commercialrealestatepuertorico.com. You could see inventory of close to 100 million. These properties I bought through the years, and they're mixed use, like downstairs retail, upstairs residential or offices, etc. And that gives you an idea about my portfolio. I concentrated the portfolio there that I hold, but I buy and sell and improve, etc. throughout the US. I even have students finding deals and they get assignment fees, etc. We're doing these right now in Georgia. We've done in Florida, quite active. California a lot because I have a place in California as well.
Awesome. What do you feel are some of the main keys that have made the biggest difference in allowing your business to be able to grow and run smoothly?
The biggest thing I've done that's different is practically every business model I thought of that I have done, I realized that there is an opportunity to scale it by creating a bigger pie for others to join me. First, I started teaching, and then people said they want to do business with me. So I started creating joint venture programs where they can do things with my money, with my knowledge, etc. They can go maybe find the deals, create joint ventures, etc. And then the best thing, then people said, I want to invest with you, Cherif. So I said, okay, I set up a real estate fund. That's back 16 years ago. And I set up a very unique type of real estate fund. And that helped me grow like crazy. And then I realized people wanted their own real estate funds. And so that was the biggest impact I've had on my life, is helping others set up their own real estate funds, which are debt funds. They're not the normal equity syndication, but real estate funds. And that helped them grow like crazy.
Yeah. Can you expand on these funds? Like
Yeah.
what just share
Okay,
more
so
about it.
so let me define a few terms, if you will. A syndication is when somebody sets up a structure whereby the Securities and Exchange Commission, which is the watchful eyes of the government division, that says if you're going to raise money from people, raise capital money, and go deploy it on their behalf and making all the decisions for them to return a profit, you will have to file with the Securities and Exchange Commission, which is with the SEC, a private placement memorandum, a regulation. You have to follow certain regulations and be in compliance. Otherwise, we will suspend you, will fine you, jail you, however bad the infraction is. But if you follow the rules, yes, this is good. And you can do a syndication, which is raising the capital from various investors for a specific deal. So a syndication is raising the money for one deal, let's say an apartment building or a storage facility. But a real estate fund is a structure that allows you in that structure to raise the money for maybe an apartment building, for a storage facility, for development, for loaning, for borrowing, for partnering, for managing, and all types of things can go. It's like instead of buying a stock in the stock market, you buy a mutual fund. So I help people set up that type of mutual fund, which is a real estate fund. And in a syndication, usually it's an equity structure whereby people invest with a real estate syndicator that raises the money. Usually that syndicator charges the investors about 3% on the property they're going to acquire. Let's say they're going to acquire a $5 million building.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So they're going to charge 3% acquisition fee. So it'll be $150,000. Then from the cash flow, they'll pay the investors maybe 5-6%. And then they keep the rest. And then when they sell the property, they're going to pay from the upside gain 5 years later, maybe 70% of the gain, and they keep 30%. So that's called the equity splits, if you will. The problem is sooner or later, these syndicators, and they set up one syndication, buy an apartment building, another one, a third one, etc. Sooner or later, they realize, oh my God, I'm working so hard for the investors. And it just, it's too much work, it's too much risk, something goes wrong, the investors want to actually go after the acquisition fees and mismanagement, etc. So it's a lot of work and not that much return compared to a real estate fund, where you set up only one structure, not structure a syndication every time. You have to go to an attorney, pay $30,000, $40,000 to set up the syndication to go acquire a building. But one structure, which is a real estate fund, that's a debt fund, whereby you tell the investor, this is an open fund. You can come in and invest, let's say, from $25,000 to millions of dollars. And when you put your money in, we're going to pay you a steady return. Let's say 6% from $25,000 to, let's say, $249,000. We'll pay you 6% per year. We'll pay it maybe twice a year. You put $250,000, we'll pay you 8% per year. And we're going to take the money, we're going to buy these types of assets. We're going to buy some apartment buildings, we're going to buy some storage facilities, we're going to buy some single tenant buildings, retail, we're going to buy some shopping malls with a huge upside. We're going to do a development, we're going to do some lending, hard money, etc. So now the investors can come in, they know they're getting a steady return. There is no acquisition fee, there is no management fee, there is no disposition fee. And anytime they want to cash out, they are not stuck for 5 years. They can actually request a withdrawal within 12 months because the SEC allows the fund manager to actually raise more money to pay somebody who wants to come out, or maybe refinance a building or sell a building. So it's such a flexibility for the investors and for the fund managers. And the beauty is there is no closing date. These are approved by the SEC to can stay open. So the person raises the capital and they have been investing, and now 3-4 buildings are doing well. You can refinance as a fund manager one of the building, pay off the investors, or actually take the money and go buy other buildings and keep growing. Eventually, you create as a fund manager a legacy for your family, because whatever you're holding, eventually you can sell a couple, refinance the rest, cash out the investors, and keep them for your family forever. So we've set up many people like this. I've been doing it for quite a few years now, dozens and dozens of people. We even have a network where fund managers can team up with other fund managers for joint ventures. So I created something to help a few people that were telling me, I'm doing syndications, I'm working so hard, making so little. And now with a fund structure, you can raise 10 million, and it's like somebody in a syndication raising 100 million. This is the impact and the difference of income and potential is phenomenal. And the investors love it because they can compound their return, especially if they have IRA accounts, retirement accounts. In 8%, which is paid twice a year, let's say February 28th, August 31st, 4%, can compound in 10 years is like 12% annual rate of return. This is not internal rate of return where you have to calculate how much you pay in taxes and all this. It's a pretty powerful structure. 20 years later, people will be making an annual rate of return of 20%. These are real cash flow. You know, you buy Berkshire Hathaway with Warren Buffett, the best investor in the world, historically speaking. He doesn't pay dividend. If you want to compound like this, you just put the money, you can't use the money forever. But in the actual real estate fund structure, people can truly compound based on a certain return, and it's got the incredible flexibility. So, and one more thing, in a syndication, if you have a building and you want to refinance it, cash out the money, by law, you have to pay the investors.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
But in a debt fund, when you refinance, you can take the money and go buy another building for the fund and keep growing. It's been such a phenomenal success. That structure has been insanely good. I have in-house attorneys. We deal with a great team that actually works it tailor-made for each investor and what they do, etc.
Amazing. Thank you for explaining all of that. So, what are you most focused on solving or scaling next in your business?
I want to scale the real estate funds with people. These are the debt funds because actually what I'm seeing is as they grow, they want to team up with other people. So the network grows. Not only do they go and raise capital and do some of these at a bigger scale, but then they realize, oh my gosh, we bought this small hotel and made money. Is someone else in your network, Cherif, trying to do hotels? Maybe we can team up and do a true joint venture between the real estate fund of Susan Johnson and John Doe. And then they come in together and they can create a true joint venture on bigger hotels or bigger apartment buildings. And the opportunities right now are amazing because if you look in 2025, the market has been frozen. I mean, some people say, oh, there are some activities. Yes, if somebody's down and out, somebody's going to jump in and buy it. But really, those who have the capital, they are able to get better loans from the banks. They're able to buy properties at the lower amounts. I mean, it's insane, the deals that we're seeing right now. And it's going to be like this 2026, 27, 28, and forever after. Why? Because the markets keep going up and down and up and down. And all you have to do is understand the opportunity, understand the market. And in commercial, it's based on the cash flow. I don't care what the whole market is doing. There was the deal in Georgia. The property is worth $50 million. The bank told me, we'll give it to you at $27 million. The loan itself is $32 million, the loan balance. They said $27 million, just get us out. We want to finish before the end of X month. These are deals that are unheard of. I've been in the market forever. Never seen deals like what happens now because what has been happening in the market with the cyclical patterns and all that.
Yeah, absolutely. So, you also are educating people. What are you educating them on?
So I train people on how to find the right properties in certain markets. Mainly, I'd like single tenant buildings. I'll give you an example. So take a busy street that has two-way traffic cars. I train them on finding a single tenant building. Those are the standalone buildings like an old Jack in the Box or Starbucks that's vacant and it has a sign for sale. So I train the certain students, investors. I say, call the broker, tell them you're interested in the property, use my proof of fund, which is from my real estate fund. And we have millions always sitting. And they say, I'm interested in the building. How much is it? And let's say the broker says 700,000. Well, because it's sitting vacant, maybe they can put it under contract at 600,000. They show the proof of fund and they say, I'm representing this fund, Mixif, which is my fund. We're going to buy all cash. We just need 45 days to put it under contract and close within 15 days after. That's relatively fast for a single tenant building commercial property. Usually it's 60 days to 90 days under contract, etc. So we move fast, 45 days due diligence, 15 days to close. And what I give these students, the training on what to tell the broker, how to present the proof of fund, how to present the letter of intent to purchase. And usually we put it under contract right away. So the student puts it under contract. They send me an email. We're going to send this to the tenants. So we're looking at national tenants. I've combined a list of 4,500 plus national tenants. These are the big tenants, the Jack in the Box, the Burger King, the mostly quick service restaurants, QSR, that want to expand because they're like, you look at Quiznos and Subways, all these people, they want to grow. Their business model is to grow. So I train the people on, here is the list of the tenants, here is who to contact, here is the size they look for, here's who they want to be next to. This is the ideal property. The traffic should be so much per day in traffic, etc. So once they have it under contract and they send me, here, Cherif, this is the email we're going to send to the tenant. I look at the email, I approve it, I make some changes because I'm the one doing the training. I'm the one coaching them through it because it's big profit for them and for me, as I'll explain in a minute. Then they start smiling and dialing and they call these tenants, they leave voicemail messages, they send an email. There is also a video of the place. They talk about the neighboring tenants. There is a whole spiel that I tell them how to do it. And all we need is one tenant to call that student back. And usually the tenant responds by email. We like the area. We saw the video. We saw it on Google Earth. We did our studies. We need to talk about it in more details. And that's when we set up a Zoom call. And then we go on a call, the student, me, the tenant, and maybe some other retail person or tenant representative on a call. And we tell them, we will give you the space for so much money. Usually they want 10 to 15 years lease. And we write a letter of intent that they want to lease, and they sign it. I usually have to kick in tenant improvement. So that property under contract at $600,000. Let's say they ask me for $100,000 tenant improvement to come in. They want to change the floor, upgrade the kitchen or the drive-through, whatever. So now it's going to cost me $700,000. So $600,000 under contract. I'll give them tenant improvement. The tenant will come in leasing for a whole year. And let's say the tenant will pay $8,300 a month. Like we have a deal like this. That's $100,000 a year. $100,000 a year with a tenant like these national big tenants makes the property worth 16 times that base rent. So the $100,000 base rent, the property would be worth $1,667,000. I'm telling you the numbers of the market. People can verify that all day long. It's called 6% capitalization rate. The tenants usually pay this lease triple net. That means net of tax, insurance, and maintenance on the property. So they pay the $100,000 plus they pay the property tax. Let's say it's $10,000 a year. They pay the property insurance. Let's say it's $8,000 a year. All this is paid by the tenant. There's nothing for you to do as an owner if you buy a building like this with a tenant in it. And every year there is an escalation, usually 3%. And on top of all this, these tenants give us a corporate guarantee. So if they cancel the lease or they don't make it, their company, publicly traded mostly, they pay us to leave. So it's just unbelievable opportunity. Where else can you get a property at $600,000 and it jumps to $1.6 million? Or let's say I'm wrong. Let's say they just pay $60,000 a year. Okay, times 16, it will be worth $1 million. So you get something under contract at 600. Let's say you're doing it for yourself, because many of my students don't assign it to me, because at the end, when we have the tenant ready to come in, they sign the letter of intent. I buy the property. The actual tenant then signs the lease. And what ends up happening, the property has increased in value. So for the students that are doing it with me, from the purchase price they locked it under, which is 600, to the value where it became, let's say the value is just $1 million. Went up 400,000. It doesn't matter if I'm putting tenant improvement or not. That's not the student's problem. That's their opportunities. They got it under contract 600. It's worth $1 million. On that 400,000 profit, I pay them 10%, which is 40,000. If we sign a 10-year lease, if we sign with the tenant 15-year lease, I give them 25% of the upside gain between the purchase price and the value of the lease being 16 times. So they get $100,000 assignment fees. Now, people say, okay, this is too good to be true. You make it so simple. Well, look at my success story. Look how many people walked to $98,000 assignment fee. I have a guy walked with $180,000 assignment fee. The guy, I mean, he's done it a few times. I told him, you're ready to do the deals on your own. He's now actually doing his own deal. I mean, one deal changed his life, because if you get a property at 600 and you have to put 100,000 tenant improvement, guess what? When you go to the bank and say, I have a property under contract, it's vacant at 600,000, and here is a letter of intent for this national tenant coming in. The bank will give you the loan even if you have bad credit. Why? Because they're going to ask you to assign the lease to the bank, and they'll give the loan based on the corporate guarantee of the tenant. These are corporate guarantees. This is, I mean, we've done this for quite a few years. We've had dozens and dozens of people doing it. And those are the people eventually that come in and say, okay, let me set up a real estate fund. I have people set up funds in the past that say, I've been doing apartment buildings, syndications. Maybe I set up a fund and I can do apartment buildings and single tenant buildings and shopping malls. Yesterday, I talked to two gentlemen that do shopping malls. They started with $1 million deals, and now they have 4 full shopping malls. They took the idea of the single tenant that I've done with them, and I've done it now with shopping malls. They take a shopping mall where they lost big tenants, and they learn the system. They get it under contract. They start lining up some tenants. They close when they're done. Last year, they did $10 million worth of deals, not profit, but worth of deals.
Right.
Anyway,
Awesome.
I get too excited about it.
Yeah.
It had changed my life. I mean, that's why I tell you my website. I tell you, look at my portfolio. I have Burberry's, Tommy Hilfiger, Sunglass Hut, Diamond International, the biggest diamond dealers in the Caribbean. And all these, I just got the right building, started smiling and dialing. They came in, and I've been receiving income forever. And guess what? For my kids, I tell them the same thing. They came to the training. My son was 16 when he came into the training. My daughter was 17. Now my daughter is in the university, but she knows this is the way to do it. She can scale that. She can manage this. It's extremely powerful and simple way to become free using real estate strategies and structures along with the real estate funds, etc. So
yes, thank you so much for sharing that.
Thank you.
So before we wrap up, how can people connect with you and reach you?
Okay, so www.cmrei, Cherif Medawar Real Estate Investing. They can talk to Ashley. They can email her, Ashley at CMREI. Ashley is ASHLEE at CMREI, Cherif Medawar Real Estate Investing.com. Plus, if they just put my name like Cherif Medawar, CHERIF, Medawar, MEDAWAR on YouTube or something, you'll see plenty of videos and all this. I'm happy to share like your company does. And sharing the knowledge and opening the network to the world is just one of the most powerful things people can do. And I've really enjoyed doing that. When I started teaching and doing joint ventures with students to find deals and assign them, etc., or finding the deals and do them for themselves, I didn't expect the opportunities to come like this and to grow like that. So it's been a blessing.
Awesome. Well, thank you so much for sharing your story, and thank you for being here.
Thank you, Michelle.
And for the listeners tuning in, if you got value, make sure you've subscribed. We have more conversations with operators who are building real businesses. See you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.